to recording. All right. So I'm just going to jump real quick into this disaster loan program to let you know if you haven't applied for the disaster loan, it is back open again for all businesses. It was closed to just agricultural, but is now back open to everybody. And this is both the $10,000 grant up to $10,000 grant, you clarify that, and the loan itself. And this is the disaster loan. There are qualifications that it has to be substantial economic injury. So there's catches you need to make sure that you qualify for it. But if you do, you need to go ahead and apply for it because the funds are limited for this program. For the people who have been here before, you know that the VEC has set up a website to let you report any employees that have refused to come back to work because they're saying, hey, I can make more money on unemployment than I can make with you. Well, you can actually report them. And if you're going to use one of the items as an exception in your form, you're required to actually report this to the Virginia Employment Commission. And this is just the website, what it looks like. All right, so let's jump into what the new rules are that just came out. So bars prior to June 5th, and June 5th is the date that the SBA assigned a loan number, not the date you got the money. So just for purposes of understanding that. Regards to your 8-week period and 21 and 24-week period, it is based solely on the day you got the money. So there's two different dates. But anyway, if you got it prior to June 5th, you have the option to select 8-week or 24-week period. If you get it done in 8 weeks and you think you can get it done in 8 weeks, go for it, get it done, get it off, get it approved, get it off your books, etc. If not, there are some big advantages of taking advantage of the 24-week period, which we'll talk about. So if you got the loan on June 5th or after, you have to select a 24-week. You do not have an option for an 8-week. So one of the biggest changes is the 75% payroll test is now 60%, which means you only have to spend 60% of your loan on payroll or payroll-related items. You also have, instead of June 30th, one of the calculations was you're bringing your workforce back to full staff, or at least staff as it was of February 15th, that you now have till December 31st to do that, not June 30th. So it gives you more time if you're saying, I can get everybody back to work by June 30th, but I should be able to by June 31st. So that's a new thing. There's also some new exceptions that make it even easier not to worry about having everybody back to full staff. We pretty much call it, we tried to rehire but couldn't type of exceptions. And again, we'll cover those. So if your loan was done on June 5th or after, and there is a portion of your loan that is not forgiven, you now have 5 years to pay it back, not 2. In the bill, there is a provision that says if you had it prior to June 5th, you and your bank can decide to extend it from 2 years to 5 years. But I most likely wouldn't hold my breath that any of the banks are going to do that because they want these loans off their books. But that is part of the rule. There was also another program that was available that was a deferral of employer payroll taxes. This is your Social Security taxes on the employer side, that you could defer those for 2 years. That's now an option. It was not an option before if you were taking the PPP. It is now. I don't know if too many people actually doing this because it's not normally a lot of money, and it's probably more of a pain trying to keep up with this. And remember, and in 2 years from now, you got to pay it. All right, so one of the biggest things that's come out, that came out yesterday that nobody was expecting, but it came out, was this 3508 EZ form. So this is available for simple businesses. And I don't mean small business necessarily, it's just for businesses that have a simple form to fill out. And we'll go over that, and it changes from a complex formulation thing to, I can fill this thing out in a few minutes. All right, so no changes in the IRS deductibility requirement. If you were familiar with that, it basically said, some people were saying that, well, it meant to say that you're not responsible for the income from the business, but you are also able to deduct the expenses. But you're not able to do both. And that was not fixed in this bill. So you were not required to count the income, but you also are not allowed to take the deductions for the expenses that you did have forgiven. And this is solely about the forgiven side of the equation, not the total amount of the loan. All right, so time periods. You have 10 months to submit this from the time your covered period is over. Okay, once you submit it, the bank has 60 days to send it to the SBA, and then the SBA has 90 days to provide the business an answer whether or not it was forgiven, how much was forgiven, etc. As to loan payments, and loan payments would be the amount that's not forgiven, is if you submit it within 10 months of the end of your covered period, your loan payments, interest and principal, does not begin until the SBA notifies you that what has been forgiven, what not has been forgiven. So in other words, you have this 90 and 60 day or 150 day period that you could buy by submitting it prior to 10 months. However, if you don't submit it within 10 months, you're automatically going to start getting billed for principal and interest on the entire loan, because they don't know what has been forgiven and what hasn't been forgiven. So you need to make sure that you submit these within the 10 months. Your best bet is, as soon as this thing's over with, submit it. So I know your accountant and your tax person wants to get these off the books, because especially when it's flowing from one year to the next, since you don't know how much is forgiven, how much do you take off on your tax return this year? How much do you not take off? Do you take it off and then re-add it back in next year, or what? So those are a lot of things you want to certainly straighten up. All right, so sole proprietors, one of the big things that's changed with this new rule going to 24 weeks is that before, if you were an owner-operator, a Schedule C filer, or general partner, is that you can only take 8/52 of the 2019 compensation. With this new, you can now take 10/52 of the 2010 compensation. And what they're basically saying is if you're multiplying by 2.5 times, then you're basically taking 10 weeks. You were being short 2 weeks, but now if you take the 24-week period, you now get to take 100%. This is really good for sole proprietors, because if they had no employees and they basically had very little non-payroll expenses, there was money that they still had to turn into a loan, because there was no way for them to use that extra 2 weeks of compensation. Now you can do that. As mentioned above here, retirement and health care is also included in, other than for Schedule C filers or general partners, and health care is not included for an S corporation owner, because it's actually part of your income, because it's added to your W-2 income. All right, so loan forgiveness, payroll costs do not have to be both paid and incurred. So what we're saying is that, let me give you the definition. Payroll costs are considered pay on the date that the checks are distributed or the borrower originates an ACH credit transfer. Okay, so that's the paid side. Payroll costs are considered incurred on the day the employee earns the pay. So you're able to count both the dates paid and incurred as part of your payment for payroll. So payroll costs incurred but not paid during the borrower's last pay period of the covered period or alternative payroll period are eligible for forgiveness if paid on or before the next regular payroll date. In other words, even if it's paid outside your covered period, if it's paid on the next payroll period, you're still fine in being able to conclude that as part of it. And this is just the application. I mean, as part of the instruction of the application, I just underlined the different things that it was talking about. And all this will be available to you. All right, the alternative payroll covered period is basically if you are trying to mess up your payroll by saying, okay, my payroll is not starting on the day that my PPP loan starts. Well, you can use an alternative payroll that basically saying, I'm going to start on keep my payroll correctly and carry it past the time period that I normally would. So an example is just the bar has a bi-weekly payroll schedule, which every other week, and it has to be no more than bi-weekly. The bar's 8-week covered period begins on June 1st and ends on June 22nd. The first day of the bar's first payroll cycle that starts in the covered period is June 7th. The bar may elect an alternative payroll covered period for payroll costs that starts on June 7th and ends on August 1st. So in other words, you don't have to try to cram it all into your one payroll schedule. You can use an alternative payroll schedule. If you were selecting the 24-week period, all of this is almost going to become moot because you're probably going to be able to easily spend 100% of your loan on payroll because you've got a lot more time to do it. But if you're still trying to stay with the 8-week period, this can also be very helpful. And this just explains it as part of the application, exactly what all of it said. So as to retirement plan contributions, it distinctly says that's incurred or paid. So if you typically pay retirement money into a retirement program on December and you say, heck, I got money now, let's go ahead and pay it during my covered period, I can pay it and still count it as being paid. So take advantage of that. Okay, for interest, rent, and utilities, they have to be in effect prior to February 15th. In other words, you have to have a lease prior to February 15th. You had to have utilities started. In other words, you can't say, well, I took out a new internet service on March 15th. It's a lot more expensive. Well, you can't count it because it wasn't in effect on February 15th. So, but the same thing applies is that interest for rent and utilities defined will be forgivable if paid during the covered period or incurred during the covered period. So anything that you paid, so even if you're paying for a previous month's bill that was not part of the covered period, you can still pay it. But you can also pay for the amount that's in the covered period and pay it after the covered period, provided it's paid on a normal billing cycle. So even more exciting is the fact that the application, let me just go directly to the application because this is important, is that the business, you'll notice on line 2, it says, enter the amount of business mortgage interest payments paid or incurred during the covered period for mortgage obligations on real property, and it says do not include prepayments. So if you have a mortgage and you're trying to deduct interest payments, you cannot include prepayments. In other words, they have to be as part of the periods that you're doing. If you'll notice, for business rent and lease payments, and also for utility payments, there is no statement that says do not include prepayments. It appears, and many people are agreeing to that this is exactly what they mean, is if you wanted to pay your rent for the next 12 months, there's nothing to stop you from doing that and also including as part of your forgiveness. Again, if you are going to the 24-week period, this probably is not even going to be necessary, but I wanted to point it out more to the individuals who are staying with 8-week. All right, so now there's some new FTE exception rules. These are cool. All right, so you can use any of these, and there's also a couple other ones that you can use to help you make sure, in case you're short on the number of FTEs that you have. Let's just say you don't have enough full-time equivalent employees because you haven't brought enough of them back. So first one is bar made a good faith written offer to rehire an individual who was an employee on February 15th, and the bar was unable to hire similarly qualified employees for unfilled positions on or before December 31st. So what it's basically saying is, I can't find the people I need that are qualified to do it, then that's not going to count against me. So that's a good little catch-all for you if you're having a hard time getting back to full staff. The second one is any position for which the bar made a good faith written offer to restore any reduction in hours at the same salary or wages during the covered period, or the alternative covered period, an employee rejected the offer. So if you make the offer and they turn it down, then that also doesn't count against you. Number three, any employees who during the covered period or the alternative payroll covered period were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in hours would also not require you to count as an FTP shortage. So that's another exception. You want to make sure you properly document all of these. And make sure you notice it says written offer, so make sure you're documenting these written offers. Now there's also a safe harbor, which I'm not sure that's much different than an exception rule, but we're going to cover them anyway. So if you fall under these safe harbor rules, you also do not have to be at full staff by December 31st. So the first one is bar in good faith is able to document that it was unable to operate between February 15th and in the end of the covered period at the same level of business activity as before February 15th due to compliance with requirements established or guidance issued between March 1st and December 31st by the Secretary of Health and Human Services, Director of CDC, OSHA, related to the maintenance of standards for sanitation, social distance, or any other worker or customer safety requirement related to COVID-19. Boy, that's a catch-all, because almost everybody has been affected somewhat by that. So you all may be able to use this clause if you're going to be short. Anyway, that's still your choice, but I just want to make sure you're aware of it. The last one is the bar is exempt from reduction in loan forgiveness based on reduction in the FTE if both of the following conditions are met. The bar reduced its FTE employee levels in the beginning of February 15th and ending April 26th. In other words, you reduced your head count during that time period, and that you basically brought them back by December 31st. So that would also allow you not to be objected to, even if your period is ended, and let's say your period ends on November 15th, you still have to till December 31st to bring it back to full levels and not be punished for a shortage of FTE requirements. All right, the 60% rule, which is now 60%, not 75%, and this is on the application. I just want to show you a real quick example. This is a case where $100,000 loan, they spent $55,000 on payroll costs during an 8-week period, and $45,000 spent on non-payroll costs. They're not going to give it all forgiven because they didn't spend 60%. So they're basically taking $55,000 divided by 0.6 and shows that they're going to get $91,666 forgiven. Okay, and we'll go through the application and get a better idea how this works. So what's an eligible expense for forgiveness? Payroll expenses are obviously salaries, commissions, payment of cash tip, employee health and care benefits, retirement contribution, other benefits, income or net earnings from self-employment. These have to do with Schedule C, and we had talked about that earlier. Non-payroll expenses or interest payments on mortgage. Again, all of these, and rent, utilities, all before 2/15/2020. Additionally, interest on other debt obligations previously incurred. Again, this should also take 2/15/2020. So timing of the expenses. So non-payroll costs cannot exceed 40% of the loan income and include, they have to be paid during the 8-week period or the 24-week covered period. or incurred during those same time period. Now, if you're using an alternative payroll period, you cannot also, that does not apply to non-payroll costs. It only applies to payroll costs. But you have those two options. It's either paid or incurred during that period, then you can deduct it. So, so the covered period is, as we talked about before, the same date as the PPP loan disbursement date, or for payroll, it's the alternative date. So the way you calculate your, the 3 steps of filling out the form, this is the long form, that we know it's 60% must be for use for payroll. You have to figure out your compensation. You cannot have decreased wages by more than 25%. And to clarify, wages means the hourly amount or the salary that's being paid. And for hourly basically means it's not the total amount of compensation, it's the hourly compensation. So if you were working, if you had employees that you were paying $10 an hour, and they were working 40 hours, and they're only working 20 hours now, that doesn't matter. It's not part of the program. If you have somebody who was working $10 an hour for 40 hours, but now you're paying them $7 an hour, and they're still working 40 hours, that would affect it. I don't know if very, 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 very few companies, as a matter of fact, I don't know of any company that's actually doing this. So most likely that's not going to affect you. There is a calculation, and the form goes through the calculations. It's included in the presentation, but we're not going to cover it. So you also have to calculate the number of full-time employees. So this is an important part of the process of figuring out what your FTEs are. So it's basically based on a 40-hour work week. So each person, if they work 45 hours a week, you can only use 1 for that particular employee. So in other words, you can't just keep adding up. If you have somebody working 60 hours, you can't count them as 1.5. If they work more than 40, it's still 1. You also have a simplified method, which probably won't apply to most people, but if you have the simplified method and you have people working pretty much 40 hours a week, or you have people working 10 hours a week, then you could assign 1 for anybody who works 40 or more, and then 0.5 for anybody who works less than 40. For most people, that's not going to apply, but it is another option. So just real quick for an example is, if you have an employee working 38 hours, you take 38 divided by 40, or it's a 0.95 FTE, 24 is a 0.6. Alternative method is if you have 10 employees working 15 hours a week, is 10 times 0.5 equals 5 FTEs. Again, you're probably not going to use that method. All right, so let's talk about the new easy form, which is really easy form. So you can use this form if any one of these apply. First is the bar is a self-employed individual, independent contractor, or sole proprietor who had no employees at the time of the PPP loan application and did not include any employee salaries in the computation of the monthly payroll. So if you've got a loan, if you're just a single employer, no employees, you file for the PPP loan at 2.5 times, then you can use this easy form. You can also use this form is if you did not reduce salary or hourly wages, which we just talked about, probably most of you didn't do, and did not reduce the number of employees or the average paid hours employees between January 1st and the covered period. So if you brought everybody back and you didn't decrease their wages, then you can also use this form. The last one is the bar did not reduce annual salaries more than 25%, so the same thing as before, and the bar was unable to operate during the covered period the same level of guidance activity due to compliance with the Secretary of Health, the CDC, OSHA, et cetera. So for a lot of you, you may be able to use this short form for this program. All right, so this is what the easy form looks like, the 3508 EZ. So you'll see the checklist at the very beginning where you would check which particular box is the one that applies to you. This is the form. This is the entire form. So you fill the top out just like you did the other form where you have your loan number, your address, all that stuff. The difference is at the bottom, you're going to list all your payroll costs. You're going to put your interest, your lease payments, your utility payments. You add those together. You put in your PPP loan. You divide your payroll cost by 0.6. You take the lowest number, and voila, you finished your form. That is the 3508 easy, and it is easy. All right, so now we're going to go back into the regular application, which is not easy. So we're going to talk about going through the 4 parts, which is the loan forgiveness calculation, the Schedule A, the Schedule A worksheet, and the optional demographic form. And these are just what the forms look like. We'll cover each one separately. So the order that you do these in, you're going to do the Schedule A worksheet first. You're going to do the PPP Schedule A, and then last you're going to do the calculator form. So this is just what the loan form looks like. Again, it's similar to the one we just showed you. You fill out the top. The second page is your form that basically guarantees that you know what you're doing, you didn't cheat the government and all that stuff. You just have to make sure you read through that. That's also part of the short form too, but so you still have to do that. You still can't cheat on that one. All right, I'm not going to go through those because you can read them just as well as I can. So the way you do this is you're first going to enter your compensation from the Schedule A worksheet, Table 1, and we're going to show this in a second. Line 2 is entering the FTE box from Schedule A. 3 is entering the rent or lease, et cetera, et cetera. And line 4 is going to be enter utility payments, et cetera. And line 5 is going to be entering information from the Schedule A. So let's just show you the 3 parts of the worksheet. The first is the Table 1. This is where you're just listing each of your employees, and I'll have a sample of this. Each of your employees, an identifier, which could be the last 4 digits of their Social Security number. It could be their employee number if you have one assigned, how much they got paid during this time period, and what was their average FTE. In other words, what was from a full-time equivalent standpoint, if you add up the entire period, did they do more than 40 hours, do less than 40 hours, etc. If you had a salary and hourly wage reduction, you would need to put it there. I'm not going to cover it because most of you will not. So this Table 1 is for less than $100,000. Table 2 is going to be for employees more than $100,000. And again, the same thing, you enter your cash compensation and your average FTEs. So at the bottom is step 3, where you're going to enter your FTE reduction. So it's going to ask you how many employees you had during the February 15th to April 26th. It's going to ask you how many you had on February 15th. It's going to make you do a subtraction. And basically, if you had more in the beginning of the year than you did after February 15th, there's going to be a percentage that's going to have to be taken off on your report. So you're going to have to make sure you're, as part of the mathematic process, figure that out. There's also I forgot to point out on this Table 1, there's a little button here. It says FTE reduction exemptions. This is where you would enter the number of exemptions that you're taking advantage of. In other words, if you offer people jobs, they didn't come back, or any of the other exemptions, not the safe harbor, but the exemptions, you would add those exemptions in here so that your box 2 number is higher, so that you may not have enough on the average FTE, but if you add in the reduction exemptions, it would bring you up to full staff. So again, this is just the full view of the Schedule A. So how do you complete Schedule A worksheet? So the cash compensation, you're going to enter the gross salary, wages, gross commission, paid leave. Again, this is non-employer, non-owner situation. So do not include self-employed, general partners, or owner employees of S Corporation in this particular section. Non-cash compensation is going to be anything paid for health insurance, contribution to retirement plans, employer state and local taxes assessed on employee compensation. So this is going to be, the only thing you can count is your VEC unemployment taxes that you have, since we don't have local employment taxes. So the safe harbor provision, as we talked about, I'm not going to go into this, we've already talked about it, basically is that you're reducing, the amount that you reduce during this period is brought back to full by December 31st. Then on the form that I showed you a minute ago, you can take advantage of that in step 3. So we've already talked about these extra exceptions. Cases do not reduce the bar's forgiveness. In other words, employees fired for cause, voluntarily resign, or voluntarily request and receive a reduction in their hours. I pointed this out at the very beginning of the presentation with a little bit more detail. So these are exceptions that you can use on the form. So now you're basically going to enter on the form each of these things, and it'll make more sense when you go through the actual form. So this is going to show you, we already talked about that, just kind of show you where the Schedule A worksheet is going from. And this is more for your reference. I'm not even going to cover it, I'm just letting you see it. So again, any FTE reductions go down here. If you read this, it says, indicate any position with the bar made a good faith written offer, et cetera, et cetera. These are the exceptions, and make sure you add those exceptions down here in the box. So once you've completed the table, enter the number of each amount in box 1, 2, and 3. So you're going to total these columns so that you have the totals to fit on your actual form. If you have more than $100,000 compensation, it's just going to be those two there. So you have a chosen reference period that you're dealing with, and this has to do with the number of employees that you have hired. Most people are using this year, but you have the option of picking between February 15th, 2019 and June 30th. You also have the option of picking between January 1st and February 29th. Or if you're a seasonal employee, you also have additional opportunities here. All right, so now you can see all kind of crazy stuff going on here. So you're going to take the worksheet, and this is the PPP Schedule A. So you got box 1, box 2, and box 3 that you've already filled out, and it goes up here with line 1, line 2, and line 3. Down here, if you're more than $100,000, you got line 4 and line 5. And then you have owner compensation of line 9, and also health insurance, retirement, local employment taxes, which does not include self-employed or S corporations. The S corporations just doesn't include health insurance. It does include retirement. Self-employed does not include retirement or health insurance. So those just flow right over. And then you have down here the safe harbor rule, which is on line 13. If you just read through this, if in fact you follow these safe harbor rules, then line 13 is just going to be a 1. If not, you have to use the worksheet to determine how many people you had before and how many people you had after to come up with the actual number. You'll notice it says average FTE during the borrower's chosen reference period, which we talked about just a few minutes ago about was it this year, or was it last year, or if you're seasonal, an option. And then the total FTEs and then you divide it out to come up with what your amount is. So now it's basic math from here to figure the rest of it out. So documentation that you have to keep. So for payroll, you have to document the cash compensation. So this is going to be multiple things. One is you need to show bank account statements or third-party payroll service provider reports showing the amount of cash compensation paid to employees. So if you're using an outside like ADP or somebody like that, you can run the bank reports, run the payroll reports such as payroll detail reports, et cetera, to show that the money was being used for payroll. We're making the assumption if you're using like QuickBooks payroll that you can still use that because that's considered a third party, even though you're still doing it internally. The tax forms are going to be your 941s, your VEC forms to cover that particular covered period. Now, obviously, you may have payroll inside or outside those 941s, but you still have to provide those reports to show that you were paying a certain number of people during that pay period. The payroll journals is probably going to be the number one thing that you have to do. Payroll documentation verifying the eligible cash compensation and non-cash payments from the covered period. So again, these are state quarterly, the VEC reports, canceled checks, anything to show that in fact the money had been paid to the employees. So for non-payment, for non-payroll, you're going to have to show that copies of the amortization schedules, you're going to have to show that the loan was in effect prior to February 15th. If you have a lease, you have to show that it was done prior to February 15th so that you can prove that you had a lease prior to that time period. Copies of invoices, copies of any kind of payments for those invoices, canceled checks, etc. So things that don't have to be submitted, but you still need to maintain it are going to be that Schedule A worksheet that kind of shows the information. You're going to need to show supporting list of each individual employee in Schedule A worksheet, including the reduction salary calculation that need be. Again, I think it's going to apply to most people. You're going to have to show that you offered any sort of offers, refusal, written information to show that you offered people jobs and they turned it down. So all this is stuff you're going to have available to you. And the same thing with if you were shut down, you're taking the FTE that, if you're taking the safe harbor that you were closed down because of OSHA or Secretary of Health, you just need to make sure you document in some way of why you thought that was the case. The last form is a demographic form that just it's an optional form. They're just trying to gather general information of who got the line. Again, it's not required. Be nice to fill it out if you would. So I'm going to go through a real quick example because I still want to show you the spreadsheet and have at least a few minutes to do some questions. Any questions I don't get to, we can go over for a few minutes, but I will put them in the final. I will answer the questions and send them out when I send out the rest of the packet. So here's just John Doe. He operates Valley Mowing. The recent impact of his business. He has a monthly payroll of $8,000. He applied and received a PPP loan for $20,000. Rose, which is not Rose, it's John, but I didn't change it. On a PPP loan on May 22nd, he utilized the covered period and spent monies on the payroll through July 16th. He has no employees. During the covered period, he paid $16,000 wages to himself, paid $2,000 in rent and $2,000 for utilities. Okay, he's going to use the EZ form. So he fills out this section here. He had a $20,000 loan. He put the disbursement date. He put his covered period. So he's putting $16,000 for payroll costs. He's putting his mortgage interest. He's putting his lease. He's putting his utility payment. So he adds all these up. He's got $20,000. His PPP loan was $20,000. So now he needs to figure out if his payroll, if he's making sure he's spending 60%. So he takes the 16,000 divided by 0.6, and he could have spent up to $26,000 to still apply to the 60%, but he can only take the smaller of these three lines, which is 20,000, and voila, his form is finished. So much nicer for people who have simple processes. So this is for usually the more complicated one, and this is for partial for forgiveness. So in this case here, he had a monthly payroll of 8,000. This is going to make, I'll flow through it, but you'll have access to this presentation so you can kind of walk yourself through it. John applied and received a PPP loan of 20,000. He had 4 employees at application, but only had 3 employees during the covered period. He also had an EDIE loan of 4,000. He paid $11,000 in payroll cost, and he had $8,000 in rent and $1,000 for utilities, but he didn't reduce any employees. So his first step is looking at the Schedule A worksheet, where he enters all his employees' compensation. He figures out what his FTEs are. So he's got 3. He's got 7,500 for compensation, 3 FTEs. It doesn't apply here because everybody was less than 100,000. He's showing 3 employees that he had during the period. He had 4 prior, so therefore he's going to have a mathematical formulation he has to deal with. So now these stuff flows over this. He enters his $7,500 for cash compensation. He paid himself $3,500, so a total application of $11,000. So now he's showing the number of 4 employees during his chosen period. He only had 3 at the end, so he actually have a reduction of 25%, so he's only going to be able to use 75% of his loan. So now he fills out his application. You did have an advance up here of $4,000 because that comes off the balance of what you get. So now he's putting in $11,000, and he puts in his rent and utility payments. He's taking $20,000 of his loan, but he can only get 75% of it because he didn't get all his employees back. So now his one amount is $15,000. His loan was $20,000. He could have gotten, if you take his payroll and divide it by 0.6, he could have gotten $18,000, not the $20,000. But since he didn't have enough employees, he can only take the less of the 3, which is $15,000. Again, I know I kind of went through this quick, but I wanted to at least kind of show you, but you do have access to this. So real quick, I want to go through the spreadsheet that I will be sending out to everyone. Well, I'm going to have to stop share, open up my spreadsheet. All right, hopefully everybody sees my spreadsheet. Yes. Okay, so I am going to, let me enlarge this a little bit. So the first section at the very top is where, again, this is the long form. This is all, the spreadsheet is strictly for the long form. If you're in the short form, it's pretty simple. So the first part, you're going to enter your employee identifier, cash compensation, average number of FTEs that you figured out for the covered period. Okay, so we add all those up, and it's going to give you a total of 5.2. So now we're going to enter up here the safe harbor, which we had 5 for employees, then we had 6 here, and then 6 as of June 30th, which is actually December 31st. I forgot to change that, but we're making the assumption that says December 31st. So you've got 1. So now it flows over to your worksheet, over to your Schedule A that shows your total amount of of cash compensation. It shows your average number of FTEs. We didn't have any reductions. We didn't have anything from Schedule 2. We're going to add in the employer compensations, health insurance and contribution for retirement and any taxes paid locally. We're going to add in the compensation for employers, for the owners, and it comes down and gives you a total payroll cost. And then we also have these full-time equivalency. So we started with 5 during the chosen period, and now we have 5.2, so we're good because we divide that out, we're at 1. So now we come back to the forgiveness. We did have a $5,000 EDI advance. So now we're also going to put in our business mortgage interest payments. We're going to put in rent. We're going to put in utilities. So if we add everything up, we had $136,888 in total things that we're trying to count. Okay, so we didn't have any FTE reductions on line 7. Therefore, we can count on line 8 the whole $136,888. Unfortunately, our loan was only $135,000. And if we took the payroll cost of $79,888 and divided by 0.6, we will see that we were below 60%. So I can't count all the non-payroll costs. So now we're down to 133,146. And that's the lowest of these 3 numbers, which basically means we will have forgiven $133,146 of our $135,000 that we got. Now we also had an advance, which we have to subtract from that. So in fact, we're only going to get forgiven $128,146. So anyway, that is the spreadsheet. When we send this out, it'll make a little bit more sense where you can look at it and play with it. But it'll be part of the packet I send out to you. So I know I kind of rushed through some of this stuff, but I hopefully gave you a good information on it. So let's see what kind of questions we have. Cheryl, do you want to kind of, if you've already been kind of going through them, pick out the ones that make the most sense? We only got about 5 minutes left.
Yes, quite a few questions on will there be more PPP loan availability